We're starting to see some cracks in the market. A lot of these large tech stocks are starting to show some weakness. Does that automatically mean to become bearish on the market? No, it does not. In today's video, I'm going to explain why I overall think the market is going to continue to be bullish and why some of these stocks falling like this is a good dip buying opportunity. I hope you guys enjoy. Make sure to like, comment, subscribe, do all that good stuff. Let's get started with the video. All right, so the first thing that I want to go over is this is a 1 minute time frame of the Russell 2000 futures. So the Russell 2000 is very, very important to look at because it shows economically sensitive stocks. The Russell has 2,000 of the largest, essentially, stocks on the market. They comprise of industrials, transportation stocks, financial stocks, any sort of, as well as oil, crude oil, all these types of healthcare related stocks. It's an entire basket of companies that have a wide range of influence to the market. So what I want to show you guys is just today's price action. So today, the Russell was up 1%, while the NASDAQ was down almost 1%, and the SP500 was flat. Okay, so what does that tell you? When you see price action like this, this is a 1 minute time frame. We rose on the Russell without getting any sort of pullback, constantly just drifting upwards for this entire time, for almost 2 hours. It jumped up 2%. This sort of price action is very, very conducive with institutional buying pressure. This is not your normal price action. General normal price action has ebbs and flows. There tends to be bounces, there tends to be pullbacks, there tends to be bounces. We didn't get any of that in this. This was a constant, just straight line upwards. And when you get straight vertical line upwards, what does that tell you? Where have we seen this sort of buying pressure before? We've been looking at large tech stocks. And I said the strength in the large tech stocks would end up permeating in the losers. The Russell 2000 has been a loser. It has been a lagger in terms of strength that the other large tech stocks and other indices have been showing. So what I purely wanted to show you is that the S&P 500 and the NASDAQ here have made new highs. They are at new all-time highs. The Russell, when you look at it on a daily time frame, the Russell 2000 is lagging far behind. But what did today just show us? It showed us that money is flowing out of the winners, going into the losers. So why is that important? Why have we been monitoring money flow from certain stocks into other stocks? It's because it tells you the direction that the market wants to go. If this was truly a bearish move to the downside, if the market was genuinely going to be bearish, the Russell 2000 would be the last indice that would show any sort of strength, because the Russell 2000 is already weak. Wouldn't it make sense to short the weakest of the basket of indices? If one stock is showing consistent weakness, and if the overall market is going to be weak, why not short the weakest stock to make the most amount of money to the downside? But that is not currently what's going on. Instead, very, very clearly, we see the large tech stocks selling off a bit, getting some profit, and the money was algorithmically driven, institutionally driven by just us looking at that 1 minute time frame. We could clearly see that that's the case. Now, the Russell, once again, we could easily just create a fib level from the most recent highs to the most recent lows. The Russell hugged this 618% fib. It's been holding the 618% fib very, very well. We finally got multiple closes above, and this is now going to start bouncing, in my opinion. Even if we do get a bit of a pullback, this strength, primarily, the strength that we saw today in the Russell is not something that we can overlook. It's abnormal. When there is abnormal price action, you have to take it into account. This is not something that you can easily overlook. It's not worth being a contrarian over. It's not worth saying, oh, you know, the rest of the market is weak. Oh, the Russell is just a dead cat bounce that's going to end up fall. You cannot think that way. You have to have an open mind, regardless of the bias that you have with which direction the market should be going. You have to take things on face value. When the market is being this institutionally driven, to this extent, when it's shooting upwards in a straight line on a 1 minute time frame, you can't neglect that. So, as I'm saying, the Russell has at least another 10% to the upside. So why would investors want to invest in the Russell? Is because all of these large tech stocks and the S&P are already above all-time highs. What isn't above all-time highs? So if you are a bank or a hedge fund, if you're a family office that manages hundreds of millions in the bank, if you're a bank managing, tens of billions, why would you want to invest in a company that is already into all-time highs, that you've already missed the boat on, right? You don't want to be a chaser. So big money is not going to chase heavily. They're going to invest in companies and stocks that still have more room to go to the upside. The Russell is a prime example of such an investment, because purely based off of the percentage increase to the recent highs that it still has. And this would be the same concept as crypto, right? For example, if everyone has been in this situation, if you're looking at crypto and you're seeing, okay, Solana is at $100. All-time high on Solana is $400. That means there's a X percentage return to all-time highs. This is the same concept that they have in terms of stocks as well. So that is not out of the norm. Now, with that being said, what we have to do to continuously see the strength in the Russell is you want to see the driving factors that cause the Russell to rise, right? So number one is the financial sector. The financial sector, the banks, brokerages, these have a very heavy influence on the Russell 2000. As you can see, new all-time high. Completely gapping up, showing extreme strength here on the XLF. This is not weak. This is not weakness. This is overextension to the upside, a break on a bull flag, showing extreme strength with no end in sight to the upside. You don't want to be a contrarian and try to stand in front of a moving freight train of momentum. When the market is moving this strong, the last thing you want to do is you want to act like Spider-Man and say, okay, there's a train coming. Let me stand in front of it and let me try to catch a top. It's not how you make money. You have to have no bias and you have to accept, okay, I wasn't expecting the market to rally like this. But you have to put your ego to the side and not think, okay, the market, it's already rallying so much, we've got to get a pullback. We don't have to have anything. There doesn't need to be a pullback. We can continue rising. What happens? Oh, wow, this is a great opportunity for a short. Oh my gosh, I'm going to go short along this as a high. Oh, what happened the next day? New high. You're still holding on to your shorts. Oh no, it's okay. I'm going to average in. Oh, it's going to drop. No, it's going to drop. What happened today? Completely new high. Ripped to the upside. And why did essentially the reason why you entered into the short should have been nullified, but because you had a bias of where the market was going to go, you missed out on a fantastic opportunity to the upside. Instead, you were on the losing side of the trade trying to short. And this is something that many retail traders all have struggles with. The same mistakes occurring over and over and over again, you have to learn from them. And this is something that if we don't learn from, not only are we going to continue losing on a daily basis in terms of our day trades, but also in terms of our longer term bias for swing trades as well. So the XLF, what did we just learn? Clear-cut strength. Monstrous strength. The industrials, the XLI, clear-cut strength, another high. This is not a bearish market. This is not a bearish market, okay? So we could clearly see, let's look at coin, right? Coin, what happened recently with coin? New highs, rallied upwards. What happened with Hood? Robinhood, right? A brokerage. Coinbase, a brokerage. What happened with this? new highs, rallied, been a monster. Why is that? Is it because the market's weak? You think these stocks would be doing well if the market was weak? Absolutely not. You have to realize that these stocks are only going to get an intense amount of institutional buying pressure if the market dynamics under the hood is strong enough for people to be putting in tens of billions of dollars into these positions. They would not be putting in this sort of money into these positions if the market was going to get a monstrous pullback. Everyone on the internet that's saying, oh, this is bearish. Oh, we're in a bear market. Oh, the market's going to drop. Have no idea what they're talking about. They've been consistently wrong for years. And the fear dynamic that they portray in their videos is the only reason why people click their videos. Do not fall for it. Just because something doesn't logically make any sense with the market does not mean that it won't continue. The market can remain solvent. And the market can remain irrational longer than we can remain solvent. The market can continue rallying and doing things that it shouldn't on paper. But if we continue to have our bias and we trade against the market, that's how you end up losing all of your money. That's how insolvency occurs. Now, with that being said, things are starting to get a little fun and interesting on the NASDAQ. Okay, so clearly we've been seeing a complete uptrend, a vertical line to the upside, similar to what we were just looking at on the Russell 2000. The NASDAQ on a daily time frame has been an absolute monster. This strength is not to be messed with. Clearly, this is extreme strength. But interestingly enough, we finally see some sort of a red candle here. This is the first instance of major weakness after a very long time, where we now see a retest of this trend line and some sort of at a junction where the market should be getting a pullback. Now, do I want to automatically go short here? Absolutely not. My bias for the next 2 to 3 months is always going to be when we get pullbacks to levels of support. That's when I'm going to go long. Do I want to try to go short here with a high of most recent high as a stop loss? You could absolutely do that. But the safer short would be if you get 2 closes below the trend line. If we end up breaking below the trend line tomorrow, if we get a retest of that trend line and it closes again tomorrow, that becomes a much more attractive shorting opportunity. It increases the likelihood of the trade to continue and the momentum to shift. Right now, the momentum is still bearish. The momentum is still extremely bullish. We can continue to rise and hug and hold this trend line. This in and of itself on paper is not the time to go short. What we're seeing on the NASDAQ is similar to other stocks as well. So the NASDAQ itself got a bit of a pullback. What is causing these pullbacks? Why is the NASDAQ having these pullbacks? It's because of these large tech stocks that were very, very overextended to the upside, now starting to get pullbacks, and now we have to see if they're going to hold support. For example, NVIDIA, multiple 3 opens and closes outside of the upper level of the Bollinger Band. Generally, when you're trading outside of the upper level of the Bollinger Band like this, it leads to a pullback. This is a reason why NVIDIA was down 3% today. Was I saying to go long into this extreme strength? Absolutely not. This was not a good opportunity to go long when the market is this strong. We're up 2, 3, 400% on our longs because we held and we got into weakness. You don't go long into strength. So this is a big mistake that many retail traders make. When they see strength, oh my God, wow, Bitcoin's at 20,000. Back when Bitcoin was at 20,000, 3-4 years ago. Oh my God, Bitcoin's at 20,000. It's at 18,000. I think it's going to go to 20. All those people that went long, a couple months later, Bitcoin dropped down to 3,000. From 18,000 to 3,000. Why? Because they were going long into strength. You can't do that. Same concept over here on a smaller time frame, smaller scale. You don't want to go long into extreme strength, which is why NVIDIA got a bit of a pullback. We need to see if NVIDIA can hold 150 If NVIDIA holds, if it doesn't hold 150, it's going to retest 147 to 148. This is going to be a monster level of support. If not here, then we can drop back down all the way to this trend line and to this important 144 level. The 144 level has been a level we've been monitoring for the past few days where NVIDIA consolidated. While NVIDIA was consolidating like this, as it held this level and didn't break down below, this was the launch pad for NVIDIA to bounce from 144 all the way to almost 160, a 10% increase in 5 days. Now, how much of a decrease would it be to retest? It's an 8% drop. NVIDIA can definitely drop 8%. But is this the time to start shorting NVIDIA? What is the best possible trade to make? The best possible trade to make, in my opinion, and it's going to remain my opinion, is to wait for us to test levels of support and go long. It's been my opinion this entire time. Back in April, when everyone was saying, oh my God, the market, oh, bear market, market's going to drop. Oh my God, I don't know what to do. Oh, time to go short. Hamid, why are you going long? Oh, you're an idiot. Why are you doing this? Oh, worked out, didn't it? Worked out perfectly. We went long on the lowest day of the year. Worked out. I put my money where my mouth was, posted on Twitter, shared it with everyone. I said the market would bounce. I said down here, I'm going long. Mapped out my reasons. Now we're holding on to longs. We're holding on to longs. My bias is still bullish, not because I bought down here. It's because this is the best trade to make. If there was ever a good opportunity to go short and for the bias to become bearish, for everyone that's been watching, you guys already know that I would become bearish and we would catch a top. Right now is not the time to try to catch a top, okay? So it is instead the time to wait for levels of support to hold and go long at those support. Play alongside the momentum of the train. Don't try to stand in front of it. Play alongside it. You missed the ride? Try to hitch on to the side. Just try to grab. It's not India. It's not, it's not safe to do that. But it is what it is. Play alongside the momentum. All right? So we see NVIDIA is dropping, right? AMD. Obviously, AMD, NVIDIA, both chip-related stocks, they're going to be dropping together, okay? Very, very simple. AMD was consolidating at 130. NVIDIA was consolidating at 144. They both jumped up almost 10, 15%. Very, very overextended to the upside in terms of the Bollinger Band. Very algorithmically overextended, showing 2 standard deviations away from the original point, which is the 20 exponential moving average. Makes sense why we got a bit of a pullback. Spectacular. Is this now the time to become extremely bearish? Oh, wow. AMD, oh, it's dropping. It's not going to hit 150 anymore. It's going to go to 110. Oh. You want to try to short? Be my guest. Go for it. Go for it. No. You want to go short, right? Go for it. Everyone that's been wanting to go short for the past 2 months, how did that work out? How did that work out for everyone that you guys watch on the internet? Oh, the market is bearish. Oh, 2025 is going to be a bearish year. Let's just look at a chart of the SPY. Okay? Let's just look at the chart of the SPY where we ended up going long and how much percentage we're up on the SPY from that point. The SP 500 is up almost 25%. We can even look at NVIDIA to make it really to make it very, very understanding of what I mean here. NVIDIA is going to be up huge. 75%. NVIDIA is up 75% if you just went long and held. None of these were good shorting opportunities. But what inclined people to go short is these looked like extreme buying pressure. You're contrarian because people want to be contrarian so badly. Because people see something that's obvious and they see, okay, in the past, and this makes sense. This completely makes sense. I completely understand why people think this. But it's wrong. Let me explain why it's wrong. In the past, when the market is flowing nicely, we've seen multiple times when, okay, this is clear-cut extreme strength. The strength is not going to maintain itself. It's a good time to go short. I completely understand that sentiment. But when you see strength like this continue over and over and over again, regardless of what's happened before in the past, you have to adapt. So now that's a big problem that retail traders have, is because people don't want to adapt. People would rather be wrong and lose money than accept the fact that they're incorrect about something. That is a very big precursor of why people lose money, is because of pride and ego. If you have too much pride and ego, you're never going to make any money. You're always going to be trying to short. You're going to be a salty guy. You're going to be upset that other people are successful when you spend way more time and effort into trading. I'm sure there's tons of people that put tons of effort into studying charts, studying the macroeconomics of what's going on in the world, reading the books, understanding the balance sheet, the cash flow, everything. For what? For what? Because you want to be a contrarian? Because you think, oh, according to my calculations, this is what should be happening. How'd that work out for you, buddy? Doesn't work out well. And that's a big reason why on every single larger swing trade, I've been always correct. For the past 5 to 6 years that I've been making these, I've been correct about every single time. Every single time I said I was going to go short, every single time I said I was going to go long, I've been correct. So there's, the results speak for themselves. Anyway, NVIDIA and AMD, they're going to get a pullback. Microsoft, similar situation to the NASDAQ. Microsoft is starting to get a pullback. It's starting to come back to this monstrous uptrend. Monstrous uptrend. This is not normal. This is not normal Tom, Dick, and Harry, Joe, Schmo buying pressure. We're getting a pullback, great, but we're coming back to the uptrend level. That's when things are going to get interesting. Once again, similar situation. We're going to see if we get 2 closes below, and then we can see if that would be a good opportunity for a smaller short. Overall, every single dip is a buying opportunity. If I'm wrong about this, that'll be the first time in half a decade. It is what it is. No one's perfect. I'm not saying that this is going to work. I'm saying there's a... At this point, I mean, it's 100... Based off of past probability, it's about 100% probability that I'm correct about this, but there could be a small chance that I'm incorrect about this, but I don't think that's the case, purely based off of all the variables that we're looking at. So, Microsoft, getting a bit of a pullback, spectacular. Google, I am bullish on Google because it is a lagger. It is a loser, similar to the Russell 2000 that we were just looking at. These have a lot more room to go to the upside. When a stock has a lot more room to go to the upside, $1 trillion company, one of the Mag 7, when you see NVIDIA and AMD getting monster pullbacks, this money that they sell has to go into somewhere. It has to go into a different stock because they are constantly looking for a return on their investment. If you have $100 billion to manage, and you sold a large portion of your portfolio, you want that money working for you. The money is going to flow out of the winners into the losers, into the Russell 2000s, into the financial sector. And in my opinion, it's also going to flow into Google, because Google is a Mag 7 stock, one of the laggers, AI-related company, setting up for a monster move to the upside. And we are holding the 50% fib. 175.70. We might even get a pullback down below the 38.2% fib. Every single dip, in my opinion, off of these are good buying opportunities. So Google, solid play. Apple, 3 days ago, I tweeted Apple was going to start going. What ended up happening? Apple is up. In the past 3 days, after my tweet, Apple is up 5% in the past 3 days. It jumped up $10 in three days. It is now setting up for a monster move to the upside. I tweeted Apple when it was around 200. It's at 210 now. In the after hours, it's going to see 225, 230. Do you want to keep being bearish? Is that what you want to do? When these large tech stocks are giving spectacular opportunities to just buy and hold, not think. Is this really the time? One more thing to really drill it into people's minds, right? If Apple, if Google, if every large tech stock was at a high, and if they were starting to show weakness at their highs, right? You could see if Apple was at 260 and we're starting to see cracks to the downside on the NASDAQ, we're starting to see weakness on Microsoft on the trend line. Sure, that would be a little worrisome. That might be a cause of concern. But you see Apple down in the dumps, trying to get its life together. This is a good investment. You invest in companies when they are weak, when there's a good opportunity for a bounce. And that's currently what we're seeing with Apple. It's currently what we're seeing with Google. And a big reason why I said that we were going to get a bounce. Let me see if these still work. Oh, it does. All right, perfect. Let me see it. Okay, perfect. I haven't used those in a while. All right. If these were working, right? It was a precursor to why I thought Amazon was also going to work. Amazon. What ended up happening with Amazon? Almost a similar, identical setup to what we're seeing on Google and Apple. I knew that based off of the strength in the market, Amazon was also going to bounce. Amazon was consolidating very, very perfectly at around the 213 to 214 level. And then what ended up happening? Monster bounce. I was showing that this was going to lead to a really, really good rip to the upside. We would see above 220. That's exactly what ended up happening. Amazon doing this is almost a guarantee. It's almost a guarantee that Apple and Google are also going to bounce. And it worked out really, really well on Amazon. Apple is working out really, really well. Google is about to have its time also. Google is going to see above 190, easily above 185 in the coming months. That's almost a given. So a lot of interesting things are about to happen. Netflix also exactly coming and retesting the uptrend line. Okay? When Netflix is like this, Netflix was a monster winner. Same exact concept as Microsoft. Monstrous winner coming back down to this trend line. Amazing opportunity for people to even go long. You could even go long on Netflix right now. But safer opportunities to go long on Netflix to add to longs, 1230, 1220. Not up here in the first instances of weakness. You don't want to be a complete bullish biased person and be an idiot. This is not the best time to go long, obviously. Monster major red candle. I'm not saying this is a good pullback to buy, right? Maybe if you were to buy this for 6 months out for a long-term play, yeah, sure. But when we get more extreme move to the downside, once we get those extreme moves, I don't want people to start becoming bearish. You have to control yourself and buy the dip, because these are going to be the times where the market is going to bounce off of these levels. We might not necessarily bounce off of every red candle, but into the weakness in the next coming months, according to seasonality, purely according to the institutional monstrous buying volume that we see in the market, these are going to give good buying opportunities, in my opinion. Make money. Don't make it harder for yourself. Put your pride and ego to the side. Make money. Stop surrounding yourself with people that are doom and gloom in terms of the economy, in terms of the stock market, in terms of crypto. Every person that's, oh, I'm bearish on crypto. Oh, crypto, oh, Bitcoin, oh, it has no use case. Oh, it's not good. Oh, what's the point? What's the point of crypto? Who cares? Who cares? Back when Bitcoin was at $15,000, I'm sure you would want to have bought one of them. We're at $100,000 now. Oh, but AI is going to it's going to destroy what Bitcoin has because artificial intelligence is going to break the keys and the wallets. Shut up. Just make money. Stop overthinking. Stop overanalyzing everything. If you see momentum bullish, play alongside the bullish momentum. Stop saying, oh, according to the GDP and the CPI data of everything, Powell is trying to be very hawkish on the market. Oh, the interest rates are going to... Shut up. Shut up, please. Just make money, okay? Stop making things difficult. Let's look at Meta. Same concept. All of these stocks getting pullbacks. Makes sense. Spectacular. So we looked at all the large tech stocks. We looked at Apple, Amazon, Tesla. Tesla is getting a little cracked at the moment. Tesla is not doing too well because Trump basically is threatening Elon to deport him. What ends up happening if Elon gets deported? A lot of Elon's grants and the company in general is not going to get the government funding. Tesla has been running off of government funding, primarily from the Democrats back in 2011, 2012, right? Tesla has a lot of government contracts with defense contractors, just in general with tons of government agencies and companies. They were originally a clean energy company. So Obama really, really pushed clean energy back during his terms. That's why Tesla got a huge boost from the government. The fact that Trump is now threatening Elon and saying, hey, all of that stuff can go away, buddy. That dropped Tesla 5% in the day. And that has dropped Tesla almost 17% in the past few days. Tesla's getting a little, not looking too good for Tesla. Overall, $300. Overall, $280. These are good dip buying opportunities still, in my opinion. Regardless of how weak Tesla is doing according to macro news, their own company news, these are still good dip buying opportunities. I really think that Trump and Elon are going to come to a reconciliation. Trump is not going to be able to do anything legally to Elon because there's too many government interests vested into Elon. Elon has too much infrastructure in terms of his Starlink in other countries where they are getting data on people's phones and their habits. Elon also owns Twitter. That is too much of a data asset for the United States to lose out on. He has tens of millions, hundreds of millions of users essentially on X training AI on people's behavior. The United States is not going to kick him out. This is all just BS in my opinion. And you also have to realize that Elon and Trump both understand the power of their words in terms of moving stock prices. Why would they want to buy Tesla at $350 when they can make some tweets? Tesla will drop to $250 and then they could buy it at $250. Okay? When there are tens of billions, hundreds of trillions of dollars on the line, morals and things like that. People scam, people act shady for $10,000. You don't think they're going to do that for when there's hundreds of billions on the line? Of course not. So, of course they are. So, you have to just realize, there's too much at stake for Elon to ever really get kicked out of the United States. He's going to continue, as he already is, he's going to continue being in cahoots with government contractors. He has contracts with the NSA, the CIA, lots of government infrastructure companies. It's not going to happen. So this is just a minor pullback. Even if we do get a bit more of a pullback, that's just an even juicier opportunity to go long, in my opinion, because they just manipulate the market. It is what it is. Really solid dip buying opportunities. Hopefully Tesla drops another 10%. We'll go long. But right now, it's causing... this is a fake out, in my opinion. This is not going to be a sustained move to the downside. Tesla is not going to... Tesla's at 300, right? If Tesla were to drop to 215, that is the recent lows in April. If we get a drop to 215, if we get a 30% drop on Tesla, I promise you, I'm going to be the biggest Tesla bull on the internet. I'm going to be like, guys, go long Tesla. You have to go long Tesla. This would be I can't even imagine if they were to do this. And I guarantee you, into extreme weakness, when things look very, very bleak, they're going to come to a reconciliation and Tesla is going to shoot up 20%, 10% in a day. That's exactly How quick we are to forget. That is exactly what ended up happening a few weeks ago when Trump and Elon were beefing. Tesla dropped a bit. Oh, everything's good now. Oh, we're friends. Tesla jumps up 10%. Same concept, guys. It's the same concept. Please do not get manipulated by what's going on, the smoke in the mirrors, okay? Please just keep in mind Tesla is a good long-term investment. Wait for dips to go long into Tesla. Now is not really the time. We could get more pullback, but overall, now is not the time to be extremely bearish on any of these stocks, okay? So we went over all of these stocks and everything, right? Last but not least, what we really need to look at in terms of the stock market is the VIX. The VIX is very, very important to monitor because it has an inverse relationship to the market. Inverse. If the VIX is falling, if the VIX is showing weakness, that means the overall market is going to be showing extreme strength. What does the VIX look like right now? The VIX has been showing extreme weakness. We've been holding below $17 on the VIX for a very long time. Anytime that we're trading below 17 on the VIX, that's extremely bearish for the VIX. If something is bearish for the VIX, then that's bullish for the overall market. And that is currently what's going on. The VIX is holding below 17. It is trying to hold this level of support. One of the only things, alongside the overall bearishness of the large tech stocks, one thing that does signal weakness in the overall market in the coming days is the fact that the VIX is really trying to base out and hold this level of support. It held 16 very, very well, bounced very aggressively, and now it's trying to break above 17. This objectively is trying to show a bit of a bounce in the VIX. Once again, if the VIX is going to start bouncing, that means the overall market should be falling. What did we just see in the overall market? A lot of these stocks are starting to show some weakness. NVIDIA, AMD, Microsoft, Meta, Netflix, and Tesla. 6 of these large stocks are starting to show weakness. And it makes sense. We might get a bit of a pullback in the coming days, maybe even the next week or two. Spectacular. Congratulations. But this does not mean we're not going to make new all-time highs. We're going to see new all-time highs again in August, September. We barely got a blip. But what's going to end up happening is we're going to go long. We're going to hold on to our longs. And into the end of the year, we're going to make even more money just holding long. So, yeah, it definitely pays to trade alongside momentum. Everyone wants to be Spider-Man nowadays and just stand in front of a train. But what ends up happening? You don't have superpowers. You cannot remain solvent longer than the market remains irrational. It is what it is. What are you going to do? Anyway, there's that for the overall market. Last but not least, we can take a look at the S&P 500, the ES futures. You can see that we are coming back up to this trend line here. There's more room to the upside to retest into 63.50 area. Still more room to go to the upside. ES had a flat day. You could see flat green candle. NASDAQ, big red candle. Why was the ES flat? Because of the strength in the Russell 2000. The Russell 2000 affects the S&P 500. The NASDAQ also affects the S&P 500. But because the Russell was so strong, it overcame the weakness of the NASDAQ, caused the S&P to be flat. Okay, that's currently what's going on with the market. I hope this made sense. Next, I really want to take a look at the Forex market and gold. All right, next, let's talk about gold and Forex. This is a daily chart of gold. And we've been monitoring an uptrend level for quite some time. This is an uptrend level from back in December, January of this year. All right, so January 2025, we've created an uptrend level. Why this is relevant is because we have clearly seen this act as a major level of support. All throughout here, it's been hugging this trend line. Heading into March, February, we got a perfect touch to this trend line, to the downside, to really, really drive it home that this is a very important level, technical level that they want to hold it above. And then what ended up happening most recently in April, when the entire market had a huge downturn. April came, we dropped exactly to this trend line over here on April 7th. On the low of the day, we remained above it. So clearly, this trend line is very, very important to maintain, right? And then again, just in May, perfect wick to this trend line. So now we are back at this trend line. We had a close below it. This was not an automatic reason to be bearish. What I look for is 2 closes below a trend line for a continued bearish momentum in that direction. We didn't get that. We got a monster rip to the upside right afterward, and essentially bulls are doing exactly what they needed to do. Bulls needed a close above 33.33. Literally above 33.33. I was saying above. Literally, that is the exact level that I was saying needed to break above for bulls to continue having bullish momentum. That's what ended up happening. Now, are we going to continue? Not necessarily. I don't know. But if we break above 33.80 from this setup now, then the bearish situation that any sort of bears had is really going to become very, very difficult. Because this is a falling wedge on gold. Right now, this is a falling wedge. Falling wedges are extremely, extremely bullish patterns. We're creating a falling wedge at a major level of support that's been holding for an entire year. This is not the time to start becoming bearish. It's really not the time to really... You don't want to go short and become bearish into extreme strength. You would rather... Same concept on gold. Same concept on these large tech stocks. You would rather go short into weakness with tight stop losses. If we get 2 closes below this trend line, sure, then we might end up going short. Spectacular. Now's not the time, in my opinion. Just look for 2 closes below the trend line for a continued move to the downside. Okay, there's that for gold. Next, let's look at the Euro USD. The Euro USD, also a monster. Very, very strong, showing lots of strength. We broke, this is a monthly chart of the Euro USD. We broke a massive downtrend from July of 2008. On the monthly time frame, you can see that we've been holding this level, this downtrend, for years. Not only on the Euro USD, but also on the British pound. We have been in a monster downtrend. Okay? And most recently, with multiple touches, we have finally broken above, and now it's rallying time. The market is completely rallying. This was the monthly. Let's look at the weekly. The weekly time frame, the market is just absolutely rallying. There's no pullbacks in sight. Not only have we created a normal uptrend level from the most recent lows, we have now created an uptrend similar to what we're seeing out of Microsoft and the large tech stocks. Monster vertical line to the upside. What did we learn? This is not the time to become excessively bearish. Yes, we could get a pullback at any time. Great. But once again, if yesterday we saw this extreme candle right here and you said, okay, wow, I think now's the time to go short. We're going to get a pullback in the market. Oh, the euro is not going to be able to sustain itself. It's going to drop. Great. By all means, go short. Spectacular. What ended up happening today? What happened today? The market continued showing strength. We ripped to the upside. Your shorts would have been down money. You would have lost money if you had just played alongside the momentum. You would have just comfortably just enjoyed the travel, enjoyed the scenery. You would have made money to the long side. But why? Why does everyone want to be bearish so bad? Why does everyone want to be so correct? Oh, I called the top. Oh, I knew this move would happen. Just trade alongside the market. Stop trying to be right about everything. That's the problem. So that's that on the weekly. On the daily time frame, does this look like something that is bearish? Does it look like a bearish setup? Absolutely not. Absolutely not. Maybe you need glasses. Maybe you need to go to the doctor to check up on your eyesight. This is not bearish. So this is an opportunity where once again you're going to be going long into support. All right. So there's that for the euro. Let's look at the pound. Same concept on the pound. Let's look at the monthly time frame on the pound. Same concept. Monster down move from July of 2008 from the financial crisis. Huge move to the downside. Created an uptrend. Finally broke above it. Finally broke above the downtrend of April of this year after almost 15, 20 years almost. Weekly time frame. Massive buying pressure. On the weekly time frame, we're creating a vertical lineup. On the daily time frame, even better. Even better. Not as vertical, but this is not the time to go short. This is not the time to go short. Let me show you a trade that people would have taken to go short. Let's take a look. Okay. Awesome. Great. On paper, spectacular. This is on paper a logical trade to take. But the reason why you would not take it is because of the context. You have to look at how strong the overall market has been relative to the weakness that we've seen for years. Just now, in the past 2 months, the market has been extremely bullish. Is this now the time where you want to start applying principles that you know in normal market environments? No, you have to lean very, very bullish. So let me tell you what a lot of people ended up doing, okay? Many people tried to go short these highs right here. Oh, wow, this is a great zone. They drew they made it look very pretty. They had their stop loss. They had their support, resistance. Oh, wow, the lower time frame, the FVGs, the lower, oh my God, it's going to great. Spectacular. What did all those words do for you? This was an amazing opportunity to go short on paper. Spectacular. What happened? We ripped above it in 1 day. In 1 day, we ripped above it. Now, people are very stubborn, right? People are very, very stubborn. Guaranteed people are not going to have sold, right? People don't have discipline. They're not going to sell their trade when it's not working. Guaranteed. No one sold, right? Many people did not sell. Instead, they averaged in. The reason why, they averaged in on this big candle. Great. The reason why the candle after that ripped even more was because the shorts started to try to short even more. And then they started to cover. So they realized, okay, we are on the wrong side of the market. Let's go short even more. So many people ended up trying to reshort only for the market to rip even higher. As they averaged into their shorts, they were forced to cover their shorts and accept the fact that they were wrong. Many people got margin called, and that's why this candle ripped very, very aggressively to the upside. Now, in an offshoot miracle that you weren't liquidated, you still have the position. Great, you went short again. Oh my God. Oh, now we're gonna have to drop. Oh, the next day a red candle. Oh wow, spectacular. What ended up happening? Curled upward into another high, and your people, right? People ended up trying to reshort 3 times. This was 3 times on paper that would have been a decent short that retail traders would have taken. This from the get-go was a bad trade because when you zoom out, this is just the beginning of a monstrous move. The market has been staircasing up. You can't just assume the market is going to stop. Even if it does, that's great. But the highest probability trade is to play alongside the momentum. The highest probability trade was to go long. Even though it didn't inherently make sense to go long into levels of resistance, that doesn't necessarily automatically mean you go short at resistance. Instead, you wait. You are patient for some weakness to go short. You don't try to go short into strength. You definitely don't try to go short into resistance while the market is showing this much strength off of the lows, off of 15 years. 15 years of weakness. Is this now the time to start? Oh, okay, I'm going to go short. Oh, the market's been bouncing for 2 months. We were dropping for 15 years. Oh, the market's been almost in a straight line for 2 months, guys. I don't know if this could continue. Use your heads. Use your heads, guys. Use your heads. There's that for Forex. Next, I want to take a look at crypto. All right, let's start off with crypto. So this is a daily time frame of Bitcoin. Bitcoin, clear as day. This is extreme strength. We're holding above 105. Once again, this is not a monstrous opportunity to go short. Yes, you could in the short term. You could go short alongside this momentum. You could have the 618% fib as a zone to be short for a bit of a move to the downside to 103. But again, once again, right, what we're looking at right now is this is a monstrous bull flag. It's trying to hold. This is a resistance level that it's trying to reclaim and break above. What is this telling you about the overall market? What is this telling you about the crypto market? It's telling you that overall, things want to be bullish into the summer, into Q4. Q4, in my opinion, is going to end up being very bullish. All of these, if we do get dips, are going to be good dip buying opportunities. One thing that really, really screams at me in terms of this being a good dip buy is we have to look at Solana and Ethereum, because all of these have a very big influence on each other. If Solana and Ethereum are both setting up for a move to the upside, Bitcoin is also going to be having a move to the upside. Similar, if Microsoft and all of the large tech stocks are very bullish, you have to assume the SP500 and the NASDAQ are also going to be bullish. Okay? So very simply, based off of just this setup of just looking at Bitcoin, this is a bull flag. If we were to take a measured move on Bitcoin, this is going to easily bring us to above 118, 120. So all of these are good dip buying opportunities. If we were to drop down to 103, 102, a move from 102 to 120 is a 15 to 20% increase on Bitcoin. Solid trade. You have to assume that that's what's going to end up happening. We ended up, just think about this, okay? Think about this. Iran closed the Strait of Hormuz. We had a massive scale attack between Iran and Israel. Massive Middle Eastern conflict recently. The US bombed Iran, and Bitcoin is still holding up like this. This has to tell you something in terms of what institutions think about where price should be. If the market in general was very, very afraid, if Bitcoin and crypto was not a tangible money-making asset, and if the market started to do badly, Bitcoin and crypto would be the first thing that people would sell out of. But what ended up happening? Bitcoin is being held onto. They are not selling. Instead, we're seeing massive dips. We're seeing massive moves to the upside. Just recently, June 23rd, Bitcoin bounced monstrously from 100,000 to almost 106,000 in a day. That's a 6% move within a day. So this is, you have to realize, once again, institutions and large banks are very, very heavily invested in Bitcoin and crypto and the overall market as a whole. Bitcoin is setting up really well. And one of my biggest arguments for that is because Solana and Ethereum, namely Solana, is really starting to set up. So what we're seeing out of Solana, this is a daily time frame. Once again, huge loser. Solana is a massive loser. We, from the current price, we are almost 100% gain away. Solana is at 148. The most recent high was at 300. 150 to 300 is 100% gain. Going long right now on Solana, if we were to retest the recent highs, that's 100% gain. That shows there's a lot of upside potential on Solana. When there's so much upside potential on these important coins, important projects, it tells you that Bitcoin is going to continue rising. So my argument, right? So first of all, we're seeing a falling wedge on Solana at a level of support. We're holding this trend line. We're holding support as well. 140 held as support. Now we're holding 144. Even if we drop below 144 and bounce back down to 135. Even if we were to come back to 120, is 120 the place where you start wanting to be bearish? Absolutely not. Which is why I'm saying all of these are good dip buying opportunities. On Solana down here at 130. If we drop below 120 on Solana, guys, stop eating out. Stop spending money on women, on food, on clothes. Save up all of your money and buy Solana. Okay? Use all of your extra money to buy Solana. Okay? So please do not get caught up in trying to be greedy. You have to be ready to position yourselves in investments, because investments like these do not come around often in your lifetime. Things like this, in my opinion, Solana is going to hit $800 to $1,000. You don't want to miss out on an opportunity when you could have bought more for a longer term investment. So be very, very vigilant. Do not try to get greedy and wait for, oh, I want an extra $3 lower. Oh, I want an extra $5 lower. All of these are amazing opportunities to invest long term into Solana, in my opinion. And with that being said, right? With that being said, if Solana jumps up to 200 to 210 to this area here, that's a $50 move in Solana. What do you think is going to end up happening in Bitcoin? Is Bitcoin going to start capitulating? Is it going to start dropping down to 80,000? No. Investors are going to see strength in Solana and say, wow, Bitcoin should also be rising. That's what's going to end up happening. Next, Ethereum. Ethereum is garbage compared to Solana in terms of its technology. It's absolutely dog shit. But institutions and older banks and older people love Ethereum. That's why the stock has recently been skyrocketing, is because they're building on Ethereum, they're idiots. Ethereum is terrible to build on, but it's great. Congratulations. They're building on a crypto. They should rather be building on Solana because it has the technology is faster. It's way cheaper. To transfer $100 of Ethereum, you have to pay $12 in fees. You have to pay an enormous amount of fees. So it's just retarded to build on Ethereum, in my opinion. But, Ethereum is the number 2 to Bitcoin. A lot of these people don't know any better. So they're saying, oh, wow, like mainstream. Oh, wow, Ethereum's great. Ethereum was the second main crypto to get listed on large exchanges in the US to be traded on with futures. So what we're seeing, technically, right? Ethereum, also a loser, right? Also about 70%. What is this? 70% from the most recent highs. Solana is about 100% away from the most recent highs. Both of these are giving good long opportunities. When they're both giving long opportunities like this, you have to realize institutions and banks want to make money. They want to make money. They want to throw a couple $100 million into a trade, let it sit there, and let it double. That's what they want to do. Do you understand? Ethereum and Solana are both giving these opportunities. Link, Litecoin, all of these are giving these opportunities. Okay? So now Ethereum, to really, really zoom in on Ethereum here. If Ethereum can hold above 2,400, there's no reason why it, off of this setup here, right? Because this recently shown extreme strength. Okay? Even if it drops down to 2,200, this area, this is going to rally above 28 and above 3,000, and people are going to kick themselves for not trying to get in earlier. And that has been the case for the past half a decade. For how long most people have been watching and monitoring crypto, whenever crypto is very, very weak, no one talks about it. People only talk about crypto when we're at all-time highs. At that point, it's too late. At that point, it's too late to enter anything because the price is already skyrocketed up. Okay? So you want to invest in these coins and you want to go long in these coins when it hurts your stomach. when you don't think that there's any more room for this project to even work. You want to go long when there's extreme weakness, because no one else is trying to go long into extreme weakness. The vast majority sheep mindset of people, the vast majority of people, when they see weakness, oh, we're going to zero. Oh, we're going to keep dropping. Oh, we're just going to keep dropping. Oh, we're going to keep dropping. That's not how you trade. Think about trading in terms of looking for good long opportunities to make money as investments. When Bitcoin dropped to 3,000 back in COVID, instead of thinking, oh my God, wow, the market, oh, we're going to go to zero. We're going to go to zero. The risk reward at 3,000 to 20,000 was what? Almost a 7-to-1. It was a 7-to-1 return on your investment if we were to retest 20,000. Why would you not want to take that trade? But what happens to the vast majority of people is when there's extreme weakness, when there's monstrous weakness, oh, the market's going to go to zero. I would rather not do anything, or I would rather short. We have to play along. We have to look at what's going on in the market, and we have to go short. No. When things get that weak, you have to look for long opportunities. Always. And I was saying, right, you have to play alongside the momentum, but you cannot play alongside the momentum when things are extremely, extremely weak. When things are extremely weak, institutions are going to buy the dip. When things are extremely strong, institutions are the reason why it's extremely strong. So you don't try to short that momentum. When it's extremely weak, you go long, because institutions, by default, banks and institutions, by default, want to go long into weakness. Banks and institutions do not, by default, go short into strength. Okay? So, hope this made sense. I hope you guys enjoyed today's video. If you've been watching for this long, I really appreciate it. Really appreciate you. And I forgot to mention, but I started to go live on YouTube again for day trading. I wasn't able to really have a solid stream today because there were some technical difficulties. You would think, being from where I am, the technical difficulties wouldn't be an issue, but you know, that's what happens. You need to get some H-1B visa guys to come and help me, but that's currently not the case. But anyway, I'm going to be streaming again. We're going to be sharing day trades in the early morning. And if you guys want access to everything, the link is down below. Really appreciate you guys. If there's anything else that you guys want me to touch on, any other tickers, anything else that you guys would want me to comment on, please feel free. I read every single comment. I really, really appreciate all of your love and support. And feel free to let me know. All right. Really, really appreciate you guys. Hope you guys have a wonderful rest of your night. I'll see you guys tomorrow. Take care. Have a good one.